Welcome to the latest episode of Sound of Finance, the podcast of ZDB. Reorient capital flows towards sustainable investment. That is one key goal of the EU Commission Action Plan for financing sustainable growth. As such, the fund industry has a key role to play in transforming our economy. This goes along with many questions. Where do we stand at the moment? How does the fund industry consider ESG and sustainable finance regulation? Is it another burden or an opportunity? And what about the challenges the industry is facing? My name is Müller-Dethard. I'm a senior consultant at ZDB, and I'm joined today by Marc-André Bechet. Marc-André is Deputy Director General at ALFI, that's the Association of the Luxembourg Fund Industry, and he's someone with first-hand insights into the needs and current topics of the fund industry. That is why I'm so happy to have him here today to discuss one of the hottest topics nowadays, sustainable finance. Welcome, Marc-André. Thanks for taking the time today to sit down with me.
It's really my pleasure, Jan. Happy to be there and happy to take your questions.
Let's get started. Marc-André, just recently, ALFI, Morningstar and ZDB have published the second annual European Sustainable Investment Fund Study 2022. The subtitle reads, Sustainable Investments from Niche to Mainstream. That does sound promising. Where are we on this journey?
Well, I think I take from your question, Jan, that the main focus of question is from niche to mainstream. But I think I would like to step back a little bit and look at the global picture. In today's world, I think society has changed quite a bit. Politics is taking action as well on the sustainability front. We see as well that the financial sector is moving ahead and that investors have a different focus and actually join forces in terms of looking at sustainability in a different way. So clearly, we're not looking at whether people are convinced. It's not a matter of conviction. It's really something which is an absolute must. Mm-hmm. I would like to refer you to a very interesting paper which was published by the European Commission, a strategy paper on the 2nd of March 2022. That was actually after the Ukraine crisis, well, the start of the war. And I really like that paper, which was quite unnoticed, but it looks at all the different pieces of a huge puzzle, and you put things together, and then you get your global picture. There are, questions on the role of globalization, on the sustainability of our business models across Europe, even the lifestyle of each of us, the excessive reliance on non-renewable energy, and of course, the too high dependency on Russian fossil fuel. So these are all interconnected factors, and that gives you a different sense of what the agenda is all about. If you look back as well on a few steps or a few years backwards, I think that when we saw the action plan on sustainable finance being published by the European Commission 4 or 5 years ago, I think, it was a piece of paper. We had not really realized what it means in practice. And now we start to really understand the magnitude of what has to be done by all actors of the society, be it investors, be it, retail investors, the policymakers, the businesses, so the investing companies, as well as the financial sector. So I think that we're moving to a different step nowadays when looking at the agenda backwards. Now, the question is, I don't think that sustainable finance is niche. It's no longer niche. But I would not, and I think I'm a bit against the odds, I would not say that it's mainstream. In the sense that if you look at products today, sustainable products, the level of intensity of sustainability, or if you want to put it very simply, the greenness of financial products is still very low, and it will grow over time. Again, I would like to refer you to a study published by the European Commission back in 2019. It was referred to in a consultation on Article 8 of the Taxonomy Regulation. And the Commission had looked at the 1,400 largest listed companies across Europe. And at the time in 2019, the percentage in turnover aligned on taxonomy was 2.5%. So very low, actually. Today, it might be 5 or 6%. But that is to say that if you have across the board sustainable products, the level of alignment on the taxonomy by definition will be low because simply the level of what is aligned on the taxonomy at investing company is quite low. And I would, for that reason, and because also the agenda is what it is today, which is very much a moving target, I believe, and I want to see our members as well of Alfie asset managers and different providers, I see a pause in the setting up of new products, sustainable products. We have already anywhere between, depending on how we classify sustainability products, between 15, 30, 50% of the assets. I would not see that increasing dramatically in the short term. I would rather see a pause, people waiting for really the regulation to fully roll out, see how we start to report based on the level 2 templates that are going to kick off in Jan next year. So I see that there'll be a wait and see attitude perhaps for a few months before we move to the next stage.
Yeah, that's interesting that you say a momentary pause in the number of sustainable products. Marc, let's talk a little bit more about the study. So the study aims to provide a snapshot on how sustainability objectives and the respective legislative interventions are shaping the fund industry in Europe. Like, what's your opinion on the subject and what surprised you most?
Yeah, and that is a very broad question. I cannot answer it. If you want me to answer, that's going to be a conference of a day. So okay. I've selectively taken a few points that I think really summarizes the situation. I think that you hear quite a bit of criticism against what the European Commission and the co-legislators. It's not only the European Commission, by the way. That's also European Parliament and the Council. The regulation as we have it in Europe, we boast it is probably the most advanced one in the world. To some extent, this is probably true. And we also hear quite a few criticism that it's not really the right way of doing things, and we could have done the sequencing differently and this and that. Yes, that is true. Probably what we have to do is take that as it stands today. The regulation is as good as it can get. And I think there's a clear message from the European Commission and ESMA that we should get started. And then, the next step would be that this set, which is extremely complex, will be refined and improved in a second step. But stop criticizing and do your job. I think this is a message. And we know as well that the NCAs, ESMA, will not be too strict in the supervision of what asset managers are doing, in a sense that you cannot expect things which are not yet set in regulation. Now, it's true that everybody agrees the sequencing of the regulation should have been the other way around, because we basically wait for investing companies to start reporting extensively, and we have the regulation which forces us to report as asset managers. So this is definitely not the proper way of doing things. We know that. What is a bit of an issue for me from a regulatory standpoint, it is the next requirement under MiFID II starting from the 2nd of August, where whenever you speak to your investors, your clients, you're going to have to ask them for their sustainability preferences. And yet, in front of that, you don't have that many products. We only start get reports from fund managers. I just got a note today that only 50% of products are reported against the European ESG template as of today. So, it's in a week's time. And the second thing is basically, if you speak to your investor, your wife and your kids, and you tell them, listen, you have the choice between sustainable products and products which are not sustainable. On top, you're doing a good thing if you invest in sustainable product. And on top, the long-term view is that probably the return will be higher on sustainable products. Then you would expect everyone to jump into these products. So I think we're going to have a risk of a expectation gap between investors saying, I want that product, but then you're going to have to explain why it is so complex and why we don't have that many products on shelf today, or the level of alignment is very low. And I think from a retail investors client perspective, I think this is really not ideal. So that would be my second point. My third point is a bit of a criticism to all of us, and that is something that derives from the regulation. We all speak of Article 8 and Article 9 products. And this is categorization which is driven by the text, but it is something which is really very poor if you want to communicate to investors. And the European Commission and ESMA are very upset nowadays and saying you should stop using these Article 8, Article 9 categorizations as quasi-labels. These are not meant to be labels. And I must say, this jargon does not help in communicate to investors. So I think that you should rather refer to a strategy which is best in class or exclusion or whatever, but not that Article 8, Article 9. The fourth element, and I think you've seen that in the study, that the percentage of sustainable products is actually very diverse across Europe. So there might be good reasons. I think that, the culture is different, the appetite from investors is different, the way asset managers set up as well. So you could expect differences across Europe, but not that huge differences as we see today. Be it, in the proportion of sustainable funds, the way Morningstar defined it in the study that we just published together. Or if you look at the Article 8, Article 9 products, you see huge differences between, say, per jurisdiction, anywhere between 5 and 50%. And that is something which is not really helpful. And that is something that is not just asset managers being, responsible for that. I think this is across the board, being policymakers, being NCAs, and even ESMA reckon that it is not an ideal situation. That is deriving from the fact that the regulation is not yet entirely mature, that we have differences in the way we understand it. And that's something that needs to be fixed in order to avoid these huge discrepancies between jurisdictions, which are to some extent not relevant. And then the final point on regulation, as I said, the sequencing has not been the right one. So I think that what is really the next big step is that investing companies will start reporting. And today, they're not that many reporting because the regulation does not require all companies to report. I'll touch on that later on. But we're engaging in a vicious circle in a sense that companies will be tempted to report because it will bring them a benefit, probably a reduced cost of capital, probably more interest from asset managers. So there's a vested interest in reporting, even if you're not bound to do that. But that covers the EU. That does not cover the world. So the question, if you look at, I just spoke to an asset manager in Japan a few days ago, and they said, yes, companies in Japan will start reporting because basically the market is very largely open to foreign investors. But I'm not sure we could expect that from any market in the world. And there was, again, I'm citing a lot ESMA, but I must say they're publishing a lot of interesting documents. There was a working paper published in May, which is called The Drivers of Cost and Performance of ESG Funds, which I went across. And there was some hint that, there might be a reallocation of assets, of investments based on geographies and or asset classes where you get information which is really required for you to report back to investors. There's some hint that, you might see asset managers divesting, and you might be having issues in geographies like emerging markets where typically the information will simply not be made available, and the smaller companies in these markets will not bear the cost of making that information available just for the European funds that invest in these markets. So something which I'd say, I don't want to be too negative, but something to watch, and hope that we will induce all companies worldwide to follow a standard, and probably touch on that at the end, but the accounting standards on non-financial reporting will be key in driving the global agenda and making sure that all companies worldwide start really to figure out what they have to report in a consistent way.
Okay, so there might be, or there is, a certain downside to sustainable investing named greenwashing. This means that funds are pretending to invest in sustainable products, but are indeed not. For example, studies find that some supposedly green labeled funds are indeed not green, and there are also voices from the people in the industry that complain about greenwashing. Those funds that are accused to be engaging in greenwashing, do they do so on purpose or because they don't know better?
Jan, it's not the most the best question we like to hear.
Yeah.
Greenwashing is not a buzzword that we like. But, let's step back a little bit. If citizens, if investors, NGOs, whether we like it or not, or firms like yourselves, if you are engaged and you enter into this debate and this discussion of greenwashing, at the end, I would see it as very positive, because we don't want the financial sector to operate in isolation. It is not a silo. We need really to be connected to society and to investors. So I do not object having a debate of greenwashing. Now, where I would a bit take a different stance, and I would push back on what you said. You said studies. I'm just wondering, which studies are you referring to? And are these scientifically based results that we can discuss in objective mode? How do you define the greenness of a product? Mm-hmm. Today, we're debating the definition of sustainable investments. We don't have data on a taxonomy alignment. We cannot measure, we cannot report, and yet we hear that some funds are engaged in greenwashing. So that's, very much debatable, and this is not something which is really easy to address. I think that to some extent, in a few cases, people take the stance that some investments should be prohibited. You should, apply exclusions on fossil fuels, on controversial weapons. And to some extent, this is true, but that is not the answer to the whole question. I think this is only part of the solution. Is certainly not to only apply exclusions, but to engage into a transition of the entire economy. So exclusion will not be sufficient, even if in some cases this is the right answer. Now, I mentioned before that we are entering into a vicious circle that in the future more companies will be reporting. This is really important to understand that today the number of companies reporting in Europe is very low. It is based on what Article 8 of the Taxonomy Regulation requires you to do under the Non-Financial Reporting Directive. And then the game changer will be the next piece of regulation that is now approved. That is the Corporate Sustainability Reporting Directive, CSRD. That is a game changer. And according to the European Commission, the number of companies being bound to report will increase dramatically from a current number of 11,000 to 50,000 companies, but gradually starting from next year on and actually until 2026. So we are going into the right direction, and that will allow products to report, and that will probably to some extent diminish this question of risk greenwashing. And when you say greenwashing, is this something which is extremely complex? There are, I think, easy cases which I will touch upon at the end, but there's a very interesting document, again, published by ESMA, which is a Sustainable Finance Roadmap 2022-2024. And there are 3 pages on greenwashing and what the ESMA intends to do. I can tell you this is extremely nicely written. And it also hints at the complexity of the topic, the way that ESMA wants to tackle it, and I can only subscribe to it. And I think that no stakeholder, be it asset managers, investors, NCAs, and policymakers have any interest in being engaged in the debate of greenwashing. That's the last thing we want to do. So I think that there's a common interest of all stakeholders, being private and public, to really come to an end on what greenwashing is all about and avoid the situation to happen. They will harm investors, and ultimately it will also harm the transition that we want to achieve. So that's really my take. Now, to be honest, there will be always bad guys, people doing things which are not the proper things to do. Basically, a very simple way of looking at greenwashing is to say you say you do something different. And that is something which is the case for sustainable finance, but it could be as well for the investment policy of any fund. If you say we invest in equities and we start to have a different investment policy in practice, then you might be sued by investors, rightly so. So that is broader than just sustainable finance. But that is something that, yes, you can have cases of greenwashing if you do not conduct properly. But we should avoid a debate from being too broad and really focused on the few dark ships that you're going to have, and not say that at large we have an issue of greenwashing. That is not going to help anyone.
Yeah, I'm absolutely with you, Marc-André, and I think in the long run, the dark sheeps will be found and will be sued, hopefully. So let's talk about the market sentiment. So you have like first-hand insights, Marc-André, and I also have a question on this. So you know the fund industry and its different stakeholders very well. So how does the market, so asset managers or the industry as a whole, consider ESG? Like honestly, as a burden, a challenge, an opportunity?
It's, again, a very broad question, and I have structured my answer in 4 different bits. I think the first ones will be quite obvious to all of you, and probably the last one will be a bit offline. I see that first as an opportunity, of course, as a challenge, and also as a necessity. The opportunity is obviously if you have investor demand for sustainable products, you will be stupid enough not to answer to that demand. And we see that investor sentiment has changed dramatically. I would say the driving force is still very much institutional investors, long-term investors, pension funds. Pension funds work on a time horizon of 20, 30, 40 years. So they are very much aware of the risk of the sustainability factors impacting on the value of the investment. So they are probably the first ones to move ahead and have strong requirements. If you look at an RFP that asset managers are getting today from institutional investors, you've got a series of very precise questions on that field. But now I think this question of sustainability is in everyone's mouth. And of course, any retail investor, if you propose sustainable funds, they will rather go for that than for a more classical product. Now, the second one is a bit longer to tackle. The challenge is obviously a huge one for industry. It's not to say we don't want to take the challenge, but number one, I think that regulation is driving an agenda. That is for sure. I'd like to remind the audience as well that we're not just talking about the sustainable funds or the ESG funds to articulate and Article 9 products. Actually, the agenda and the pieces of regulations cover all financial products and all financial market participants. And that's a big difference to other regulations. So basically, even if you're not, let's say, having a pure sustainable finance strategy for your products, you're still covered by the regulation, and you're going to have to report to investors, you're going to have to comply or explain. So part of the work will be done by all entities in any case. Now, if I look at the challenge, I will probably see that in 5 different steps. The first one is a question of legal certainty, because basically all the fund material, all the fund prospectuses and the offering documents have to be significantly revamped. By the way, a few times in a row, because regulation is very much a moving target. That is also something where we as an industry, we complain a bit that it is just not one piece, but something that comes in different sequences. And on top, it is so complex that you have to be really certain of what you're doing. The question on the taxonomy regulation that was kicking in this year, the percentage of taxonomy aligned assets, it was a key discussion that we had, and it was not easy really to amend your prospectuses on that basis. So legal certainty is number one. Number two, at the expense of stating the obvious, data is a big question mark. It's not only the question of collection of data, it's also the question of whether this data is reliable. And if you don't have the data, whether you will be using proxies, substitutes to collect data which is missing. And on top, in some cases, you need the data for all the matters that really are driven by regulation. And in some cases, an investing company will report on item 1, 2, but will not report on the do not significant harm principle. So you will have part of the data, but not all the data that you really need to exploit in order to report back to investors. Of course, your IT systems will be significantly impacted. That has a cost. Anything which is staff, you need to upskill your staff. You need probably to buy new competencies, people who do not come from a financial background because the regulation is entirely different. And finally, some of the fields are not yet really certain in full scope. And I would take risk management as an example, because at ALFI, we've been working on that with our members. And basically, risk management today, to be very honest, is a bit of a white sheet of paper, because we have sustainability risk factors, but then this is not a new category of risk. You still stick to the 5 broad categories that you have under UCITS and FMD, but you have to connect the dots between what you look at in terms of sustainability risk factors and the way it impacts the 5 categories of risk, essentially market risk, but also liquidity and evaluation risk. And that is something which is really not easy. My third point was necessity, and then very simplistically put, I mentioned that pension funds take a long-term view. We know that the value of some assets will simply decrease, or eventually some assets will be worthless in 10, 20, 30 years. So as a matter of necessity, as a risk manager, as an asset manager, you cannot just forego the discussion, at least in some asset classes. And then my outsider, a little bit, which I would add to this discussion, is a question of conviction. And I dare to say that, okay, we have a set of regulation, which is all nice and good, but there were people already engaged in sustainable finance or in impact investing already quite a long time ago, before SFDR and taxonomy and the agenda of the Commission came into the discussion. I would say that at least in Luxembourg, I've seen the microcredit funds being set up already 15, 20 years ago. That's a bit of a niche, but that's something which is extremely powerful, important, and that is something that started before the regulation kicked in. So impact investing, microfinance, social housing, inclusive finance, these are new fields. But, it's because you believe in it that you do things, and not necessarily because regulation is driving you into that direction. And you see as well some categories of investors really looking for these products. Luxembourg is not probably the only center, but in microcredit funds, I can tell you we have an expertise. The way these funds operate, the way they manage, the profiles of portfolio managers, the risk management of these funds has nothing to do with the standard UCITS investing in equity and bonds. So this is a separate crowd of people, different competencies, and not easy to acquire and to build up over time. I would also like to cite good friends at the Impact Investing Institute in the UK, based in London, and we have a very good contact there, which is James Broderick. And the Impact Investing Institute is doing really an excellent job in showcasing what impact investing is all about, what it means for investors, and what it means as well for the impacted communities, the real impact from a social or housing point of view. And I can only advise the audience to have a look at this website, which is providing a lot of information.
Yeah, Marc-André, that brings up a question to me, or actually just one note here. I think that this showing what impact a sustainable investment has, I think that's really, really important to get this closer connection, also to bring it up to people, to show them that there's something like happening, so that there is really an impact. So like a very interesting note and reference to this Impact Investing Institute from your side.
Indeed.
Let me come to another question. So you talked about the regulation and that this is a moving target. And I know that there are already first initiatives toward a uniform global regulation for ESG, such as the global taxonomy. And in Europe, it was already challenging to reach consensus when it comes to the current taxonomy. While I see the need for a global taxonomy to avoid regulatory arbitrage, I also feel that it may take too much time aligning all the different interests, and then we still have to save the planet. What do you think about a global initiative for sustainable finance regulation?
My goodness, if I had the answer to your question, I would be a rich man. We see different ways of looking at sustainable finance and the regulation that needs to be put in place. I think that we take the stance quite openly in Europe that we are leading the pack, that we have something which is really the best of breed. Yes and no. I think we have to be still wary of really listening to our friends in China, in the US, in other jurisdictions, to see their standpoint as well. When we need global solutions, that is obvious. We need global standards, but it should not be used as an excuse for not taking action. So to your point, if you say, yes, it's so complex that it will take so much time that you do nothing, that is really, really not what it is all about. On taxonomies, we've been told that we have across the world 200 different taxonomies. 200. And by definition, I think that it's a no-go. I was just speaking to one of my colleagues a few minutes ago before this call, and that lady was working in an Italian company, and she told me that before she joined, she had actually, as a company, to report against so many standards on the same thing, but put in a different way, and businesses were going just nuts about that. And still today, I think this is the case. So we do need common standards. They will be extremely complex, and we should not strive for perfection. So probably the way the taxonomy is going to be built, there will be a common ground, a starting base, and probably different bits and pieces that would fall on top of the common ground, because otherwise you never get started. a concept such as a double materiality, if you go to the US and try to explain to US friends what double materiality is all about, they would tell you they just don't get it the way we do it in Europe. Now, that's, the complexity and the difficulty of moving ahead. Now, I will come to a more positive stance. We do have pieces of regulation which work globally, be it on the financial side, on the tax side. So I just quote a few examples. The IFRS for accounting standards. And we had a financial crisis of 2007, 2008, and we came up with a few reforms. On money market funds, from China to LATAM, from US to Europe, money market funds operate according to a common base of principles, even though the different legislations will be, of course, local and different by definition. But you have a set of principles that apply and make sure that we don't have any new accident on that front. FMD is also a response to the financial crisis, and in some extent, it applies across all jurisdictions. And then on the tax side, tax reporting, where we all know that getting a consensus on tax or taxation is something which is virtually impossible. But we did it. On tax reporting, we have CRS, which is derived from the work of the OECD. And we even have a different set in the US where we managed to bridge a gap, which is FATCA. And FATCA CRS is applied by something like 150 countries in the world. So this is a worldwide standard. So if you want to take it positively, we will have to move forward. It will not be perfect. It will not be day one. And it will probably be in different steps and starting with a common base. We do know that there's a lot of work being done on the reporting side, on non-financial reporting. You see the work on the ISSB side, so International Sustainability Standards Board, and the corresponding side in Europe, which is a European Financial Reporting Advisory Group, EFRAG, to come up with standards which are compatible and which avoid what I said just before, that companies have to start reporting based on different standards. So at the end, the cost of doing business is also something we should not forget for invested companies. We have to report in a consistent way and in a limited number of instances. Now, I have answered your question, Jan, but I think that I would like to make a point which is a bit of the political agenda across Europe. Remember, we have this wonderful product which is called the UCITS. The UCITS goes back to 1985. UCITS was never meant to be a global standard, but it has become a global brand, and basically, to a large extent in the world, except largely the US and China, this is the gold standard. And some people were asking, do we need to have a global standard and do we need to export the UCITS? But now you see the benefit that in this piece of legislation, which is sustainable finance, where Europe wants to drive the agenda, UCITS will export the way we do things across Europe in the world and probably will induce other frameworks to align to some extent of what Europe is doing. So it was, let's say, diversion to your question, but I thought it would be really worthwhile to underline that point towards our audience today.
Yeah, thank you so much. And I think all the examples you brought up in context other than sustainability, like tax or financial regulation that is worldwide, I think very nicely illustrates that we should remain optimistic for also like a global initiative, a global taxonomy. Yeah. So I have another question, Marc-André, and this is rather about the investor and customer. So we talked a lot about the fund industry and its motives and challenges. So let's change the perspective and take a closer look at the investor. I have two questions here. So first, is sustainable investing really as easy as it is often claimed by the fund industry? And second, what can be done to reach more people to invest in sustainable funds? Do we need like more education, more transparency, a better understanding between the actions and the real impact of sustainable investing? What do you think?
Well, it is not an easy topic. If you think that we all struggle ourselves, being in the financial sector, I think your company as well as an advisor, we know how difficult the concepts are, the definitions. We struggle. I've been challenged by my wife, and I had a hard time to explain what the sustainable funds is all about and whether it would be good or not good and this and that. So no, it's not an easy topic. And at the expense of stating the obvious, you've got all different sorts of investors and they have different needs, different profiles, different investment horizons as well. I mentioned pension funds before. Retail investors, by the way, and then I'm linking the two categories, retail investors and pension funds. in a sense, a pension fund to a large extent is also working for retail investors. And so they have to take, the interest of retail investors in consideration, even though in some jurisdictions, even you can pick and choose as a retail investor which kind of products you want to invest in or what the pension fund should be doing. I have a very good example of a workshop that's been done by the School of Business and Economics of the Maastricht University. That was Professor Rob Bauer, and he actually went to one of our conferences and explained a bit how he had structured the workshop. And he had invited retail investors to express, first to explain what sustainable finance is all about, and then moving into a discussion of what the preferences would be. And I think that if you take the time to explain to retail investors and that you really give information, and these people would actually help you in defining their preferences. And we should educate investors, but not take investors for dummy people as well. And it was really very telling to me that, the outcome of this workshop was a very interesting discussion on the profile of the investments that the pension fund should be doing. I wanted to quote that as an example. But yeah, of course, retail investors, we know that the level of financial literacy across Europe is not what it should be. So on top, of course, anything which relates to sustainability is not yet on the agenda. We all know that there are efforts by the OECD, European Commission, to, let's say, move forward in terms of financial literacy, eventually making that something compulsory at the level of primary schools, or making sure that students get that information. By the way, just read a study as well that people tend to start figuring out what they do for the pensions rather at the age of 40, and just focusing on schools and universities is probably not enough. You should continuously offer financial education to all different categories of investors at different ages, and also even elderly people who do not know how to handle finance or a website or anything which is digital. So you have to adapt your programs of education to the profile of your target group. You should not just focus on one group only. Talking about financial literacy and sustainability, I mentioned MiFID II and the challenge we're going to have on the 2nd of August. Just for a second, as a retail investor, you can express your sustainability preferences in one or combination of 3 ways. You can say a percentage of alignment with the taxonomy. Okay, that is easy to explain. Percentage of products allocation to sustainable investments as defined SFDR. That is a bit less easy to do. And then a percentage of qualitative and quantitative considerations of principal adverse impacts. PI. And that is really not an easy discussion. So, when we speak about explaining to investors, you need to take the time and you need to make sure that investors have a certain level of knowledge. It also comes down to what I said at the beginning. You should keep things simple and translate this regulation into simple terms and avoid jargon that you're going to push towards your investors and they will not understand it. So, as I said at the beginning, I had any discussion with my banker and I was referred to Article 8, Article 9 products. And I think that was not probably the right answer. And it was not what I was looking for. Now, the Commission as well is very much aware that we need to make things simple. So there has been a big effort. Again, we can say it is not perfect, but we have templates for the pre-contractual disclosure, which is basically the prospectus of a fund, and the periodic reporting, which is the annual report. And that is something that is going to be rolled out for the 1st of January 2023. The regulation is well-intentioned. It is, again, not perfect. Let's get started, make the best out of it, and then there will be a revision quite soon, actually. So the intention was to design in a simple and visual way the product, its characteristics, so that investors really understand in what they invest. It's a bit the kid-like approach that the Commission was striving for. Again, quite good. It will be refined. It will be improved in the long term. And my personal take is that, of course, financial education is something that should be pushed across the board as well. And I would say even more, anything which relates to sustainability starting from primary school on a broader scale and not just looking at financial products, but on a very broad scale. That's a very strong personal conviction I have.
Yeah. So I totally agree with you that financial literacy is not only important with respect to sustainable investing, but with investing in general. So, but allow me one more question here. I think, like, as you said, getting the preferences with respect to sustainability of investors, I think that's really challenging. Also, just by asking the percentage of product alignment to the EU taxonomy, that means that you need to know the taxonomy, right? This is already also, I think, quite challenging, isn't it?
It is challenging. Well, you can always explain what the taxonomy is all about. You've got these 6 categories. You know, you speak about water, you speak about recycling, you speak about energy.
Yeah.
That is something you can explain, but you're right. You know, but then you have to explain that the percentage of alignment is very low, and that will be a frustration for your investors. And we say, yeah, why do you explain to me that your product is only 5% aligned? And even probably you put, for the time being, you might say, that is the intention, but I cannot yet evidence that I'm aligned with my objective. So that is something that is really not easy, but don't be negative. Get started. And, you know, in 6 months' time, in a year's time, things will have changed. We have evolved. We would have more data, more investing companies reporting. We will see how the reports start to really kick in practice. So let's think positive.
Yeah, I absolutely agree with you. And I think this is a whole like learning exercise, right? So we will see what works, what does not work, where do we have to adapt or make it clearer. I totally agree with you. Marc-André, it's a very interesting conversation, but we need to come to an end. So I would like to ask you a last question, and this is to give us an outlook. So imagine you will conduct the study we just talked about again in 5 years. What do you expect the results to look like? How will the European, but also the global fund industry develop over the next 5 years?
Oh, I don't have a crystal ball, number one. So that's my first disclaimer. My second disclaimer is I will answer, but probably more on a private basis. And so the disclaimer would be that it does not necessarily represent the views of my employer, Alfie, and the industry in Luxembourg, because it is really hard to give you a sentiment on this question. Very briefly, CSRD, I mentioned, is a game changer. And you will start investing companies starting to report on a broader scale and a larger number. It is not a goal per se. The intention is not that companies are forced to report and that solves the equation. It will be something that will drive companies in making sure that they always do better. So in terms of, it is a mentality shift. It's going to trigger a different way of doing business. At least that's the intention. You will always have externalities. Let's be honest. We will not move to a perfect world. And if you produce some goods, you will always have externalities, and you will always need energy and this and that and water usage. But you could do always, the best in class. But best in class is meaning to really trigger a change into the entire segment of a particular sector. That's my take number one. My take number two is that we will surely have no longer the debate as we have today on the definitions, basic principles of what a sustainable investment is all about. But there's also some of the considerations we're not yet too clear about. Biodiversity is something which is very much unknown, what it is that we want to look at and how we measure the metrics. So I think that we would have made progress on this as well. I would say I predict that the level of greenness, of sustainability, as I mentioned before, of existing products will dramatically increase. I would predict that not all funds will be sustainable unlike what I hear quite often. I hear that, we are at, 40, 50% of the European market in Article 8, Article 9, anywhere between 15 and 20% sustainable funds, and that in a few years' time, nearly the whole market. I partially disagree on that. Probably the percentage will increase, but I don't see covering the entire market. I don't see all funds being actually sustainable and aligned with the taxonomy. For me, the best-in-class approach will be the winner in terms of strategy. I would also predict an increased focus on impact investing, which, by the way, is always a bit hard to explain because, in a sense, any sustainable fund is also meant to have an impact in some form and shape. But the definition of impact investing is a very narrow one. I would refer you to the definition of the GIN. So that's something which is really very specific. For me, it's still a niche product, but that will increase in magnitude. And my final take, and I'm not saying that in a negative way, but I think the agenda of the Commission is a good one. We do have to do our homework. The financial sector has to contribute, but that is not the only answer to this sustainable finance agenda. And in some cases, I do believe that politics will be required to step in. And there are some things that should be changed in the way we do business, in the way we operate, in the way we live simply. And just relying on reorientation of financial flows to solve magically all problems of the earth is really, I don't think this is going to be the answer to the problem. It is, we have to do our job, we have to do our homework, but yeah, there's more to that. That would be my concluding words. And as you can see, that's a bit of a personal opinion, if I may say.
Yeah, but I think it's really, really nice because it nicely links back to my introductory quote from the Sustainable Action Plan with the reorientation of financial flows. And you say that's important. So the fund industry has a key role, but it's not sufficient. So politics must step in as well. So Marc-André, well, and thanks so much for your valuable insights and for a fascinating perspective on the sustainable funds industry in Europe.
You're too kind to me. Thank you so much for having me. It was really interesting, and I hope that the audience will engage. If you know where to find me if there are any questions.
Yeah, so it was a pleasure.
Thank you.
Thanks all for this episode of Sound of Finance. You can find further discussions on other interesting topics in the world of finance at our website, zeb.consulting.com, and be sure to subscribe to our podcast series. We hope you enjoyed today's conversation. Thanks for listening and see you next time at Sound of Finance.